Gbolahan Aina, a portfolio manager with Cordros Capital Limited, joins me now to talk about investing through mutual funds. Good morning to you, Gbolahan. Thank you so much for joining me on the program.
Good morning, Aria. Thanks for having me.
Now, most of the financial markets have been trading mixed. Taking a look at the numbers as I reeled out this morning, of course, from Cordros Capital, it gives us regular updates on the state of the market. It seems also that investors are cautious with regards to trading in either equities or the fixed income segment of the market. So now, is investing in mutual funds a wise thing to do now, especially for those who are wary of the risks in the market?
Yeah, thanks, Aria. Like you said, most investors are usually wary. They are risk averse in terms of the fundamentals of stocks. Some of them don't understand that fundamental. And what mutual fund does for you is that it allows a portfolio manager to invest on behalf of investors. So he understands the risk, he understands the market, he understands the asset class, and is able to generate competitive returns for all investors. So, for instance, you have a retail investor that just has 10,000 naira. That amount of money might not amount to much. If you're supposed to probably buy treasury bills, it doesn't even understand how to buy treasury bills. But if he buys a mutual fund, for instance, a mutual fund is a basket of securities. Invariably, that retail investor can enjoy that competitive return that is 10,000 naira can produce. So it's safe. It's also, most people don't understand the complexity of the market. Most people are wary, also because of the volatility of the equity market. A mutual fund helps you to avoid all those risk factors.
But you see, you just mentioned the fact that it's a risk and there are risks everywhere. And you've also talked about how safe it is. But how big is the mutual fund industry in Nigeria? Looking at the fact that it's supposed to be a basket of where you have the equities, you have treasury bills, and you have bonds as well. How big is it in a fund in Nigeria?
Okay, for mutual fund, there are different kinds of mutual funds. So you have equity mutual funds, you have fixed income mutual funds, you have money market mutual funds. Mutual fund in Nigeria is still growing. When compared to developed markets, it's still a far cry. So, for instance, in US, the mutual fund industry is about 90% of their GDP, which is about $15.7 trillion assets. In Nigeria, we are less than 1%. Total mutual fund size is just about 234 billion naira, which is a far cry from what our GDP is. But what we've seen over the years, we've seen a lot of interest in money market mutual funds, which is the biggest mutual fund at the moment, currently about 125 billion, which is over 50% of the mutual fund industry. And that's quite simple. One, because money market mutual fund provide that safety, your capital is preserved, is quite simplistic, unlike equity mutual fund. So over the years, there's a lot of fund managers coming out with money market mutual funds. Apart from money market mutual funds, in the 2006, we saw a lot of interest in equity mutual funds. Currently, there are 12 equity mutual funds that has been registered under Securities and Exchange Commission. But so far, the money market mutual fund still has the biggest size. But abroad, most people usually buy a mutual fund rather than going to invest directly by themselves. So it's a growing industry, but I think it's the future of the investment climate.
So is it an industry that we should expect to see an incursion of more people, especially as we deal with economic challenges, macroeconomic challenges at the moment?
Yes, definitely. So over the years, or what we've seen in recent time, because of the where the economy has been, a lot of people are even wary. They're not sure what to invest in. But rather than just keeping your money, because inflation is going to catch up with you, so rather than just keeping your money in a bank and earning a near zero return, or probably doing an investment I don't understand, a mutual fund helps you avoid all those risks because you're keeping your money with a financial manager who is licensed and regulated by the Securities and Exchange Commission. They have risk management experts, they have research experts, and they have the technology experts. In the financial market, the market drives on information, and fund managers have access to those timely information, which ordinarily retail investors might not have access to.
So at this time, it's not very safe for me to go and dig a hole probably and bury my money, because I keep wondering if I keep it in the bank, the bank cuts off so much charges either for keeping that money for me, or when I give it to a money market, an investment fund manager, for instance, he also has to take a commission off it. But do you think that at this time we have enough capacity in terms of enough fund managers for the money market funds to manage money market funds?
Yes, I think there are enough managers, there are enough skill set, enough expertise. So what we've seen, currently there are 7 money market funds. The past 2 months, 2 other money market funds have also come out. So it also shows the interest that investors have in this money market instrument. One is more or less capital preservation. It is simplistic. And like you know, the FPC met and they hiked interest rates from 12% to 14%. So the two side effects, yes, things are more expensive, but on the flip side, yields on fixed income assets are also more attractive. As an ordinary investor, you might not be able to take advantage of these attractive yields. But if you invest in a money market mutual fund, for instance, you are able to take advantage of attractive fixed income yields, attractive commercial papers, which ordinarily you don't have access to. Because the money market mutual fund is a basket of securities that contain treasury bills, commercial paper, fixed placement with bankers' acceptance.
But
so
then,
by investing,
sorry, Bola, to cut you. Since we started this conversation, it's looked like a very good idea to invest your money in mutual funds. But then you already reeled out the numbers for us. As compared to most of other developed economies, 90% of GDP, according to you, from the US, we still have a very abysmal performance in that particular sector. So why is it that people aren't really taking that option? Is it that they're not just interested, or nobody is talking about it enough?
So what we see in Nigeria, one, financial education, financial intelligence, financial literacy is quite low. Also, financial inclusion is very low. But over the years, we've seen an increase in that number. So I think what fund managers need to do, what investors need to do, is also to inform the investing public, inform them about the risk factors, inform them about the advantages in investing in mutual fund. So I think it has to do with the financial illiteracy of the economy.
Okay, but now that it seems as if people are beginning to talk about it, we have a lot of fund managers who are actually, chasing this particular type of portfolio. Do you think that, for instance, you want to sell it to an average Nigerian who believes that at this time, because he has to cut his consumption, he doesn't want to put any money in any investment or asset that he feels is risky at this point in time? How would you explain to him the benefits? How much yield is he going to get if, for instance, he decides to spend 10,000 naira and buys a particular equity, shares in a particular equity, or treasury bills, for instance, because that's where it seems as if we're seeing better yields in recent trading times in either the treasury bills or the bonds market?
Thank you very much for that question. Well, equity is a big long term. So anybody that is investing in the equity market should have like a 2 to 3 years horizon. For money market mutual fund, the objective or the goal is short term. That's why you find those instruments and money market instruments usually have maturity between 0 to 365 days. And I think the attraction is, rather than keeping your money in the bank and earning like a near zero return, you can put some of that money in a money market mutual fund and get competitive return. For most banks, savings accounts give you probably about 3%. But at the moment, you're investing in money market mutual fund, you can get a return that probably benchmarks against the 90-day treasury bill rates. Also, if in Nigeria, within the retail sector, a lot of people do things like Isusu, Ajo, which is very good. But in all those kind of investments or those kind of savings, if you're not the first person or second person that gets the money, if you're the last person, it doesn't really make any investment sense for you, because an investment is what you call a time value of money. So it's an alternative to savings accounts, an alternative to investment schemes like Isusu and Ajo, because you're getting competitive return on your investments.
Yeah, but then you see the returns I get on Ajo, which is a very popular term for what we know here, that's the cooperatives that you do within yourselves, either at the workplace or at home, is immediate. But with the money market mutual funds as it is, you have to wait a longer period to get your returns.
No, you don't have to wait a long period. So the way it works is that every day your investment accrues income, it accrues interest on a daily basis, and it's an open-ended fund. And what that means is that anytime you want to take your investment, you're free to take your investments. That's the way mutual fund works. Most of them are open-ended. You don't have to wait for 5 years. You don't have to wait for 3 years. Your goal might be 3 months. Your goal might be 6 months. It is a flexible investment option. So depending on your investment goal, you can structure the mutual fund to work for you. So I know a lot of people that use mutual funds to pay school fees. A lot of people that use mutual funds to pay for their rent. So everybody can have different investment horizon for mutual funds.
Okay, so that's a very good point for us to leave it. If you're thinking about saving up for your next rent, probably, or school fees, it's kind of late for, to start looking at mutual funds right now in terms of paying school fees. The schools are going to resume any minute now, but Bola Hon, thank you so much for your time.